If you think we have a cost of living crisis now, just wait for what's coming next. China has been quietly dumping U.S. treasuries for years, but something big just changed, and it's sparking real concerns of an accelerated sell-off of U.S. debt.
Dollar weakness on the flip side of yen's strength, and the fact that China's urged banks to curb their exposure to U.S. government bonds.
It's not just bonds, it is stocks too.
De-dollarization, I think, could be the line that other people will speculate.
But this isn't just some abstract government problem. This will directly impact your savings, your gold, and even the value of the dollar itself. Over the last 10 years, China cut their holdings of U.S. treasuries in half. And while they might not be the largest holder of U.S. debt, they are the third largest foreign holder. And even more importantly, they are laying the foundation for a structural change away from the United States, especially with private investors, which we'll get into more in a second. But before we can break down what comes next and how it impacts you, we have to first understand what's happening today and why. The U.S. system survives on constant buyers of its debt. Without those buyers, the entire house of cards comes crashing down. And right now, the system is more fragile than ever as China and other BRICS nations not only move away from U.S. treasuries, but make it clear that they are actively building a new world order without the dollar at the center. But if you think about it logically, indefinitely financing a country that could freeze your assets, tariff you, sanction you, it doesn't really make sense as a long-term strategy. But even if a multipolar world sounds more fair on paper, as de-dollarization continues to ramp up, it will directly impact the standard of living for everyone here in the United States. But China's moves aren't isolated. In fact, there are growing concerns around the U.S.'s fiscal stability itself. In fact, just last year, Moody's, one of the big three private credit rating agencies, downgraded the U.S., stripping the United States of its last perfect credit rating since 1919. They cited massive deficits and exploding interest costs with no end in sight for either. And you have to remember, this is not business as usual. The U.S. issues the dollar, which is the foundation of the global monetary system. You can't have the backbone of the entire world have a subpar credit rating score, and suddenly no one's going to notice or care. No, it makes nations, investors, it makes everyone nervous, rightfully so. See, it's easy to dismiss this as not a big deal. The United States, they'll always be able to pay back their debt. Okay. But at what cost to these other nations, right? Maybe it's paid back nominally, but if inflation continues to go up, if the money printer's turned on all the way to high, well, what happens to the real value of that debt that's paid back? Who in their right mind would take that deal? The entire system runs on confidence, and right now, confidence is collapsing. Now, let me be clear about something because I know someone out there is thinking it. The system itself is not collapsing tonight or tomorrow night. I'm not saying that every single nation is going out and selling all of their treasuries at once. Yes, China has cut their holdings in half. We've seen a reduction from other nations like India, but at the same time, if you see that U.S. Treasury holdings seem to be remaining steady, it's because they've been offset by U.S. allies, such as Japan or Norway or Canada, buying more. So everything on the surface does look stable, I'll give you that, but underneath, just underneath that surface, this is where the crisis is brewing. We have allies stepping in to fill the gaps that are left from other nations pulling away, and they're not buying enough. See, even if the overall holdings of U.S. treasuries look steady, what you have to remember is that U.S. debt is exploding, meaning that if holdings just remain steady, there is a growing gap between the amount of buyers and the amount of debt that needs buyers. But if there's a gap, someone has to be filling it. Now, when we think about holding U.S. treasuries, who do we picture that's buying U.S. debt? Typically, most people think of central banks, but this is where the story gets really concerning. Over the last few years, there's been a quiet shift that no one is talking about. In 2022, the Federal Reserve started their fastest rate hike cycle in modern history, and suddenly, U.S. treasuries, which historically had low yields or didn't pay that much to private investors, suddenly looked a lot more appealing. Private investors rushed in and the gap was closed. Now, you might be thinking, okay, so what's the big deal? A buyer's a buyer. It solved the problem, right? Not so fast. But this shift has come with massive risk. See, central banks buy U.S. Treasuries for different reasons. They buy it as a long-term reserve, stability. Not saying they're right, but stability, trade. Whereas private investors, they only care about the bottom line, the return they're getting on their investment. The moment that risk doesn't match return, well, they're going to sell right away, which would lead to increased volatility, more liquidity squeezes, a system that is left more fragile and more exposed. But this isn't just a theory, it's already happening. In fact, just this week, China issued a notice directing their private banks to not only stop their purchases of U.S. Treasuries, but advise them to sell their existing holdings of U.S. Treasuries. Now, this is a huge deal because, again, if we start to see more private sell-off, this is going to make that funding gap for the U.S. even wider. And how does all of this impact you? Well, 2026 is a big year. In fact, we have just over $9 trillion worth of debt that needs to be refinanced at today's higher rates, a massive debt wall we're slamming into, as well as a $2 trillion deficit that could continue to go up. So we're talking about a massive chunk of debt that needs to have buyers. But this is where it impacts you, because as that gap for buyers increases, well, we're going to see more desperate measures. And I'm not just talking about the Fed. We're going to talk about the Fed in a second, but first, we're probably going to see even more domestic absorption, which is a real concern. We're talking about U.S. banks, pension funds, even Social Security. Yes, the Social Security that is nearly insolvent, holds multiple trillions of U.S. debt, right? As we see this domestic absorption of U.S. debt, well, what does that mean? It means that every dollar is not going towards households, businesses, real economic growth, right? It's like a snake where the head is eating its tail. That's the situation we're in today. So this is bad for business for all of us, but it gets worse. That means that we now have more domestic risk. If we're looking at U.S. banks, right, who we know are sitting on tons, hundreds and hundreds of billions of unrealized losses. Essentially, they piled all their funds into U.S. Treasuries when yields were lower. Now that yields are higher, well, those old Treasuries they bought, they're worth less. They can't sell them because then it exposes the truth that they have far less on their balance sheet than it looks like they have on paper, right? We already know they're on a razor's edge, right? U.S. banks out there, they are just one bad decision away from collapsing. And I'm not trying to use a bunch of hyperbole here or scare anyone into a bank run. This is just the truth. If you look at the real numbers, right? If they were forced to sell those assets today at a loss, we already saw how that plays out with now failed Silicon Valley Bank, right? There's a reason that all these banks are holding on to these assets even though they're underwater, because on paper, they can get away with leaving them at a higher value than what they're really worth. So banks are tapped out. We've got more going into pension funds and Social Security, but eventually that's not going to cover the gap, which leads us to the Federal Reserve. All roads lead back. More QE, more money printing. Every single dollar you have is going to be worth less. Inflation and currency debasement, right? That is where we are headed this year with the massive, massive amounts. We're talking again about 11 trillion that needs buyers at a time when the U.S. debt market is just not as deep and liquid as it once was. Buyers are not interested. This is why when you take a step back and look at everything that's going on today, I am always talking about physical gold and silver, right? This is why I'm such a big believer that everyone out there watching needs to have gold and silver, because if you have your wealth stored in dollars or dollar-denominated assets, what's going to happen as this continues to take form? Well, we're going to see those, maybe they go up nominally, right? It looks like you're gaining value, but at the end of the day, what's happening with real value, right? You could be losing real value. We know your dollar's never going to be worth more tomorrow than it was today. So if you don't already have a strategy to protect your wealth from what's coming next, now is the time to do so, right? Do not wait. Do not try and time this. I know I sleep so much better at night having the peace of mind, knowing I'm protected, right? Protected with real physical gold. So if you don't already have a strategy, call us at the number below, scan the QR code. We are a full service physical gold and silver dealer, but at the heart of everything we do is education, right? And if you want to learn more about how gold and silver, as well as different assets, perform during currency resets, which is what we're living through now, right? As the fiat currency continues to be devalued, what happens to your property, your stocks, your cash, your gold, right? If you want to learn more about that, we have a free resource. You can download it, again, by scanning this QR code or clicking the link in the description below. It's called our Built to Endure report. Completely free. Get your copy today so you have it. And in the meantime, thank you again so much for being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.